Hi guys, welcome back to Father and Son Investing. Today we're going to talk about Treasury Bills. This will be the April update for Treasury Bills. Sorry, I'm a little bit late into the month doing this. Today we're going to talk about what has been happening recently with Treasury Bills. I'll throw in there some of the recent historical factors that have affected Treasury Bill yields. And then we're going to talk about where we think Treasury Bill yields may be going in the near future. I'm going to use as part of that the recent Fed meeting data or some projections that they use. I think they're very interesting to see where interest rates may be going still and how that may affect your Treasury bill purchasing. So let's get to it. Let's just get a peek again at what Treasury bills have been doing since October when rates really started to climb. So we're going to go ahead and bring in the different Treasury bills here. You can see them based on the color. Bringing in the 13-week, the 17-week here, the 26-week, and the 52-week. Beautiful, nice climb if you are a Treasury bill investor here. But you'll notice that there was a pretty significant decline here recently. We're going to talk about what may have brought that decline about. Similar graph here, although I've shortened the timeline down to the end of January of this year, and I've included the most recent auction results. Now, I've placed in blue arrows here some significant historical things or recent events that have happened that have affected the Treasury bill rate. We won't talk about the jobs, the CPI, the PPI, and the PCE today. I did that last month, although we'll be looking forward to this data that's going to be coming out. The jobs report comes out this Friday, and we'll see how that affects Treasury bills. I've added two more recent events here, though. SVB collapse on March 9th, and I've added the Fed meeting date here, March 22nd. Now, the dates that you see down here on the bottom correspond to the issue date of a Treasury bill, not the auction date, and that's important to keep in mind here. The SVB collapse happened on March 9th, 2023, but it takes a couple of days to show up in the Treasury bill results here. With the SVB collapse on March 9th, then the next issue date for the 26-week Treasury bill was the 17th of March, and you see a steep decline in that. Interestingly, though, the 17-week Treasury bill still went up. It's a shorter duration, and certainly the maturity dates of these Treasury bills affects the demand for them. We also see that shortly after, and even before the Fed meeting, the next 4-week Treasury bill here took a steep decline. So it took just a little bit of time for that one to show up, and of course the 8-week and even the 17-week Treasury bill declined. Now, some of that could have been also in anticipation of the Fed meeting. I'm going to get to those Fed meeting projections here next, but of course we'll just see that even after the Fed meeting, the price of these Treasury bills continued to decline. What I have for you here is the summary of economic projections from the Fed meeting. This was released on March 22nd, 2023. There are 20 members of the Fed here who are going to be casting their projections for what they see in the future. And I think this gives us a good idea of where we can expect interest rates to be going, and thus what kind of Treasury bills you want to be purchasing. Certainly having as much information as you can get before you make your decisions, I think, is helpful. So we're going to run through just a couple of these. I want to show you this slide here because I think oftentimes if you listen to financial channels like CNBC, you're going to hear them talking about the dot plot, and you may be wondering what they're talking about when they say the dot plot. Well, this is the dot plot. You can see the dots of where individual Fed members think that things will be going. So here we are for 2023, and here's the dot plot. This is the midpoint target range or the target level for the federal funds rate. So obviously they just raised that rate recently, but this is where the Fed members think for 2023 this mid-range level should be. We can see that there's someone who's just a little shy of 6%, but most of them are concentrating down here in the 5.1% range. But this is what I want to show you is look out into the future where they think things will be going. And it does get a little bit more spread out, but we can see that in general, the trend is going to be going down. There's still one person out here thinking that things will be staying way up above 5.5%. And looking out beyond 2025, we can see the dot plot. So this gives you a good idea of where the Fed thinks interest rates will be going and would help you try to decide whether you want to be buying Treasury bills and what maturity date, or whether you want to go for something longer like a Treasury note or a bond. Now, there are some other really nice projections in here. If you're interested, I'm not going to show them, but you can get a projection for where they think inflation is going. You can get a projection for where they think that the GDP will be going, and you can get a projection for where they think that the unemployment rate will be going. But I just want to show you this one last graphic here. This sort of reemphasizes what I said earlier about where things are going, but this also compares it to their December projections. We'll see that this dotted line here was the December projections of where they think the midpoint for the federal funds rate would be, similar to what I just showed you on the dot plot. But you'll notice that things have shifted a little bit. Back here in December, we see that there's a noticeable shift now for the March projections towards higher rates. So I think that's important to keep in mind here too as well. These Fed members are still looking for some higher rates. What does that do for your Treasury bill choice? Well, that would affect whether you want to take a longer term Treasury bill like the 52-week Treasury bill, or if you want to buy a shorter Treasury bill now, expecting that rates may climb a little higher and that you can then get a better rate in the near future on your Treasury bill. Also notice again that for 2024 and 2025, things start to move here towards the lower side, especially as we get towards 2025. Interestingly, there's that one person still hanging out at the 5.6 to 5.87 level. Now let's just talk about why this drop here may have occurred. I received a question asking why, if the Fed just raised the federal funds rate, the Treasury bill yields were dropping. We have to remember that this is a marketplace and it is supply and demand. As the price goes up, the yield comes down. So what this tells us was the yields were dropping, meaning the price of the Treasury bills, the price that we pay as an individual for the Treasury bill, was going up. Why is that? Well, that would indicate to you that the demand was going up, and so the Treasury can charge a little more. Why would people be driving that price up? Why would people be demanding these more? Remember, there was a run on the banks. People were concerned about banks and how secure they were, and moving their money to a very secure place like the U.S. Treasury obviously would be an ideal alternative. So keep that in mind. This is always a marketplace, and there are lots of factors that can affect it, and that's why I have thrown some of these in here. The next big one that we're going to look for is going to be the jobs report. We'll wrap this up just with what I'm interested in with all of this data now, or projections, and looking at the timeline. What am I interested in? I really like the 13-week and the 17-week Treasury bill. The 17-week is this one here in yellow. Obviously, that was topping out the most recent rates. The 13-week, though, is really right there next to it, and of course it has a shorter maturity date, which if rates do go up, as the Fed members seem to think they're still going to be driving them up, then having that 13-week Treasury bill may be to your advantage if you want to then lock in a longer rate or a longer yield after these rates go up. I hope this information was helpful for you and perhaps something that you're not getting at other YouTube sites. If it was, please give us a thumbs up, and we'd love to have you as a subscriber. As always, share this kind of information with a young person in your life. Help them get a good start to their investing future. And until next time, enjoy your investing.